Truths about money that banks don't want you to know. Truths about money that banks try to hide from their customers. Firstly, keeping your money in a bank is not a wise investment, as interest rates are usually well below the inflation rate. Secondly, banks are allowed to create money too, and the banking system allows every bank in the world to create a certain amount of money based on the deposits they have received. In addition, banks practice fractional reserve banking, keeping just a small percentage of deposited money and lending the rest out at higher interest rates, resulting in profit for the banks. Lastly, use credit cards responsibly to avoid falling into the debt trap. Keeping your money in a bank is not a wise investment, as the interest rates are usually well below the inflation rate. While many believe that only the Federal Reserve has the right to create money, technically, banks are allowed to do so as well. The banking system allows for every bank in the world to create a certain amount of money based on the deposits they have received. Additionally, banks practice fractional reserve banking, keeping only a small percentage of deposited money and lending the rest out at higher interest rates. Finally, it is possible to borrow money from a bank and invest it elsewhere to make a profit, as demonstrated by Mark Zuckerberg when he took out a mortgage on a home he could easily afford. 2 truths about money that banks don't want you to know. Firstly, borrowing money that has a lower interest rate than the inflation rate means that you are essentially getting free money. Banks are willing to provide these loans as a strategy to establish relationships with wealthy customers, and they offer lower rates to those with more assets and income. Secondly, credit card debt is a significant source of profit for banks, with 70% of Americans unable to pay off their credit card debt this year. The high interest rates of credit cards make it challenging for borrowers to escape the debt trap, and banks strategically target those who are used to a certain standard of living. Be cautious against the dangers of credit cards and use them responsibly to build credit scores. Falling into debt traps will be very bad credit score, and watch their other videos on business, investing, and the stock market, which may change their lives. Don't forget to like, share, and subscribe so that we will be able to create more content for the benefits of all. See you in the next video.